Hey everyone, and welcome back. You know how much we love digging deep into the numbers?
Always fun to see what companies are up to.
Exactly. And today we're going to take a deep dive into PNB Housing Finance Limited's Q3 FY25 performance.
All right.
We've got a lot to work with here.
Yeah, it looks like it.
We've got their press release, all the financial results,
Mm-hmm.
a very detailed investor presentation that lays out their strategy. We even have a thorough auditor's report.
Nice.
And get this,
What?
we've got a list of questions from investors.
Oh, wow. Like we're getting a sneak peek.
Yeah, exactly. It's like we're peeking behind the curtain to see what the market is really interested in.
I love that because sometimes, the official reports only tell part of the story.
Totally. And one thing that jumps out right away is PNB Housing Finance is making a big move into new markets.
Interesting.
They're calling it emerging markets.
Okay.
And it looks like it's all about expanding their lending for affordable housing.
So reaching a whole new group of borrowers.
Exactly. And that's got to be exciting for them.
Yeah. Yeah. Huge potential for growth there.
But I have to admit, I'm a little curious too. Is it risky?
Well, anytime you move into uncharted territory, there's always some risk involved.
True.
But PNB seems to be shifting gears a bit, moving beyond their traditional customer base.
The prime customers, as they call
Wait,
it.
the folks with good credit and higher incomes.
The ones who've always been the target for these kinds of loans.
Exactly, but it seems like they're looking at a different segment now.
Okay, so let's look at the numbers then.
Let's do it.
The press release says loan assets grew by 15.4% year-on-year,
Not bad.
which brought them to a total of INR 71,917 crore. But hang on, because here's the interesting part. Their retail loan assets.
The loans to individual borrowers?
Exactly. Those grew even faster.
Oh, really? How much faster?
17.5% year-on-year.
Wow, that's a pretty significant difference.
It is, and I think it shows there's a strong demand for home loans out there.
Yeah, people want to buy homes.
Makes you wonder, though, what's driving that demand?
Right. Is it something temporary, like pent-up demand from the past few years, or,
Like, is there something bigger happening in the housing market?
yeah, some underlying trend we need to pay attention to?
Definitely something to think about. And it's clear PNB is trying to capitalize on this trend. In Q3 FY25 alone, they dispersed a whopping INR 5,380 crore in loans.
Wow, that's a lot of money going out the door.
It is. That's a 31% increase from the same time last year.
So they're really ramping up their lending activity.
They are. But I think the real story here isn't just the amount, it's where that money is going.
Okay, so tell me more about this emerging markets segment.
Well, basically, PNB is moving down the affordability pyramid, as they call it.
Affordability pyramid. I like that visual.
It's like they're targeting borrowers who might not have been considered by traditional lenders before.
People who might not have the best credit scores, or maybe they have lower incomes.
Exactly.
That's a bold move.
And the growth in these segments is incredible.
How incredible are we talking?
Affordable loan assets are up by 234%.
Wait, 234%? Are you sure about that number?
It's right there in the report, 234%.
That's massive.
It is, and it makes me wonder, is that kind of growth even sustainable in the long run?
Yeah, I mean, 234%, it's almost like they're making up for lost time.
Right.
It does raise questions about their long-term strategy here.
For sure, and the investor presentation mentions that they're getting higher yields on these loans.
Higher yields, that means they're making more profit.
Exactly. We're talking 12, 15% compared to like 9, 10% on those prime loans.
Okay, so potentially higher rewards, but also potentially higher risks.
Right. Because are these riskier loans?
Well, that's the million-dollar question, isn't it?
It is, and it's a trade-off that PNB is clearly willing to make.
And, there are arguments on both sides.
Oh, for sure.
On the one hand, greater access to home ownership for more people, that's a fantastic goal.
Yes.
But it has to be done responsibly.
Because if people can't repay those loans, it could backfire on PNB.
Absolutely. It could even destabilize the housing market.
It's a tightrope walk, for sure. And speaking of access, let's talk about PNB's Roshni initiative.
Oh, yeah, I read about that.
It's entirely focused on affordable housing.
So what's the story there?
Well, Roshni is a great example of how PNB is putting this strategy into action.
Okay.
It started small, but now they're dispersing INR 100 crore per month through this initiative.
Wow, per month.
Per month.
That's impressive.
And their loan assets under Roshni have already crossed the INR 3,000 crore mark. Plus, they've expanded to 161 branches across India.
They're really going all in on this.
They are, and get this, they're working with over 2,000 Sarathis.
Sarathis, what's that?
Think of them as like local guides who connect PNB with potential borrowers in underserved communities.
Oh, so it's like a grassroots effort almost.
It really is very personalized.
That Sarathi program is really interesting. It seems like PNB is trying to build trust within these communities, not just coming into some big corporation.
Yeah.
That kind of localized approach, it takes time and it costs money.
It does.
So it makes you wonder, are they really committed to this for the long haul?
It's a good question, and it makes you think about their motivations, too. Is this really about expanding access to housing, or is it just a smart business move?
Or maybe it's a bit of both.
Right, because it's definitely a new market for them.
Yeah, a lot of potential customers who haven't been served before.
All right, well, before we get into the nitty-gritty of their financial performance, let's talk about asset quality.
Okay, asset quality. That's always a key indicator of how healthy a financial institution is.
Absolutely. And here's where we see some positive signs. PNB Housing Finance's gross MPA.
Non-probleming assets, they're bad loans, basically.
Exactly. It's down to 1.19%.
Okay, so less than 2% of their loans are at risk.
Right. And that's a good thing.
Definitely, it's down from 1.73% a year ago,
So their bad loans are decreasing.
which is a positive sign.
But how does that square with this move into these potentially riskier emerging markets?
That's a great question, and it's one that we need to explore further.
Because it seems like a bit of a contradiction.
Yeah, on the surface it does.
So how do they explain this improvement in asset quality?
Well, they attribute it to what they call a multi-pronged collection strategy.
Multi-pronged meaning they're doing a lot of different things.
Yeah, they're using data analytics to try to predict who might default on their loans.
So like using algorithms and stuff.
Exactly.
Right.
And they're focusing on early stage resolutions.
So try to work with borrowers before those loans go completely bad.
Right, and they're even emphasizing recovery from accounts they've already written off.
Oh, wait a minute. They're recovering money from loans they'd given up on?
It sounds crazy, right?
It does.
But they actually recovered INR 53 crore in Q3 alone.
Wow. So they're not just accepting those losses. They're actively working to get that money back.
Exactly. And that tells me they're a well-managed company, but it also suggests that maybe there's a certain level of optimism built into their loan portfolio.
Okay, so positive trends overall, but maybe with a little asterisk next to them.
Yeah, I think that's a fair assessment.
All right, let's switch gears now and talk about technology.
Okay, technology.
It seems like every company these days is obsessed with the latest gadgets and gizmos.
It's all about digital transformation, right?
Exactly. So what's PNB's tech story?
Well, they definitely want to be seen as a leader in the digital space. Their investor presentation is full of all the buzzwords, automation APIs, cloud adoption, robust security.
All 9 yards.
Yeah, and they're even bragging about a major upgrade to their core loan management system.
A core system upgrade that sounds expensive and complicated.
It's not as flashy as launching a new app or something.
Right, but is it a sign that they're serious about this whole digital thing?
Absolutely. A core system upgrade is a huge undertaking for any financial institution.
Like rebuilding the foundation of your house while you're still living in it.
Exactly. It's disruptive and it's expensive, so it really shows they're committed to making technology a core part of their business.
So is this tech focus something we're seeing across the board in financial services?
Definitely. It's not just PNB. Everyone is trying to keep up.
Because it's not just about being trendy, it's about survival.
Right. Absolutely. Customer expectations are changing. Competition is heating up.
And those fintech startups are nipping at the heels of the traditional players.
All the time. So companies like PNB have to adapt or they'll get left behind.
It's like a whole new ball game.
It is.
All right. So they're growing, they're reaching new markets, they're embracing technology. But how is all of this translating into cold, hard cash?
Yeah, that's the ultimate question, isn't it?
It is. Let's take a look at their financial performance.
Let's crack open those financial statements and see what the numbers tell us.
Because this is where things get really interesting. All right, so we've seen impressive growth, a bold new strategy, and a big commitment to tech. But the big question is, did they actually make any money?
They did, actually. Their net profit after tax jumped a whopping 43% year on year.
Wow, 43%.
Yeah, reaching a total of INR 483.27 crore.
That's a pretty big jump.
It is operating profit also saw a healthy increase, up 16%.
So things are looking good.
They are, but there's one thing that's a little bit curious.
Oh, what's that? Did they stumble across a pot of gold or something?
Haha, not quite, but their provisions and write-offs.
The money they set aside to cover potential losses.
Exactly. Those were actually lower this quarter.
So is that good news or bad news?
Well, it could be good news.
How so?
It could suggest that their loan book is healthier than they expected.
So maybe fewer loans are going bad.
Right, but on the other hand, it could also mean that they're being a bit too optimistic about the risks they're taking.
Oh, so like maybe they're not setting aside enough money just in case things go wrong.
Exactly. It's something we'll need to keep an eye on in the coming quarters.
Okay, so maybe a little cause for celebration, but also a reason to be cautious.
I think that's a fair assessment,
But overall, their key ratios like net interest margin,
which basically tells us how profitable their lending activities are.
those are all showing positive trends.
So for now, it seems like their strategy is paying off.
But let's not forget about those investor questions we talked about earlier.
Oh, yeah, those are really interesting.
Investors always seem to be asking the tough questions.
They do, and they're not afraid to dig deep.
So what were they focused on this time?
Well, a lot of their questions were about revenue and profit growth drivers.
So they want to know what's fueling PNB's success,
Exactly. And there were also some concerns about asset quality.
especially in light of those higher risk loans they're making.
Right, and they also wanted to know about their funding sources and capital adequacy.
Making sure they have enough money to keep lending,
And, of course, they were interested in competition.
because PNB isn't the only player in the market.
Not at all.
There was one question that really caught my eye.
Oh, which one was that?
An investor asked, how is PNB Housing Finance addressing the current economic environment in relation to its loan and housing finance offerings?
Yes, that's a crucial question.
It is, because the economy has a huge impact on the housing market.
Absolutely. Things like inflation, interest rates, job security, all of those things affect people's ability to buy homes and repay loans.
So PNB can't just ignore those factors.
No, they have to be realistic about the challenges out there.
So what are they doing to adapt?
Well, their investor presentation emphasizes their focus on diversification.
So not putting all their eggs in one basket.
Exactly. They're spreading their risk across different types of loans, different borrower profiles, different geographic regions.
So if one part of the market slows down, they're not completely sunk.
Right. It's all about managing risk.
And what about the borrowers themselves?
Yeah.
People are feeling the pinch these days with the economy.
Yeah, times are tough.
So is PNB doing anything to help people stay afloat?
They mentioned their commitment to offering flexible loan products.
So things like adjustable interest rates, longer repayment terms.
Yeah. Or maybe customized payment schedules.
So basically trying to make those monthly payments more manageable.
Exactly. Even when times are tough.
It sounds like they're trying to be sensitive to what people are going through.
I think so.
But it's not just about surviving tough times. It's also about anticipating future trends.
That's right.
What are people going to be looking for in a home 5 or 10 years from now?
That's a great question, and it's something PNB needs to be thinking about.
Because the housing market is constantly evolving.
It is.
So what are those future trends?
Well, will people be prioritizing energy efficiency?
That's a big one these days.
What about sustainable building materials? Or homes that are adaptable to changing needs like working from home or multi-generational living?
Yeah, those are all important considerations.
They are, and PNB needs to be ahead of the curve.
So they need a crystal ball, basically.
Aha, pretty much.
Speaking of predicting the future, one investor asked about PNB's management outlook for the next fiscal year.
What are they expecting?
Are they feeling bullish or bearish?
Well, they're cautiously optimistic, which seems to be the theme of the day.
Yeah, a little bit of both.
They acknowledge the economic headwinds, but they also express confidence in their strategy.
And they're still betting big on growth, especially in those emerging markets and affordable housing segments. So more of the same, but with a watchful eye on the horizon.
Yeah. Exactly.
But no matter how good their plans are, they're going to face some serious competition.
Oh, for sure.
What do the investors have to say about that?
Well, one investor asked a very pointed question.
Oh, what was it?
They asked, how did the company's market share or competitive positioning change during Q3 FY25?
So basically they're asking, are you winning or losing?
Exactly. It's a very direct question.
Because it's a dog-eat-dog world out there.
It is. Everyone wants a piece of the pie.
So how is PNB holding up against the pack?
Well, they're highlighting their strengths.
Like what?
They've got strong brand recognition, a wide distribution network with over 300 branches across India.
So they've got the name recognition and the reach.
And they're also emphasizing their focus on customer centricity.
So they're trying to differentiate themselves by providing excellent customer service.
Exactly. They want to be known as the company that really cares about its customers.
That's smart because In the end, it's all about building relationships.
Absolutely.
But let's get down to brass tacks here.
Oh,
One investor wanted to know about their funding sources and cost of funds,
yes. That's a critical question for any lending institution.
because if they can't access capital at a reasonable cost, they're in trouble.
Exactly. They need money to lend money.
So where's PNB getting its money from?
Well, they have a diversified funding mix.
Meaning they get money from a variety of sources.
Right. They get money from banks, financial institutions, and the debt capital market,
So they're not putting all their eggs in one basket.
which is a good thing because it reduces their risk.
But interest rates are rising these days.
They are, which means money is getting more expensive to borrow.
So is that putting pressure on PNB's margins?
Potentially, but they mentioned efforts to improve efficiency and reduce costs.
Which could help offset those rising interest rates.
Exactly. It's all about finding ways to save money.
And speaking of money, one investor asked about their capital adequacy ratio.
Yes, that's a mouthful.
It is. What does that even mean?
Basically, it's a measure of how much cushion they have to absorb potential losses.
So like a safety net
Exactly, and regulators set minimum requirements for capital adequacy.
to make sure financial institutions are strong enough to weather any storms.
Exactly, they don't want companies going bankrupt and causing a financial crisis.
Right. So how's PNB's safety net looking?
Pretty good, actually. Their capital adequacy ratio is currently at 28.78%.
And what's the minimum requirement?
It varies depending on the type of institution, but PNB is well above the requirement.
Okay, so they've got a solid foundation to support their growth plans.
They do.
So they're financially sound, they're growing, they're adapting to the market. But is it all smooth sailing from here?
Well, not necessarily. Remember those investor questions about risks and challenges?
Yeah.
There's one final overarching question that we need to address.
Okay, lay it on me. What's the catch? So it sounds like PNB's got a lot to be proud of,
They do.
but it's not all sunshine and roses, right?
No, there are definitely some risks and challenges on the horizon.
The investor who asked this last question really summed it up.
Yeah, they asked, what are the key risks or challenges that PNB Housing Finance faces in the upcoming quarters based on the Q3 results?
It's a good question, makes you think.
It does, forces us to look beyond the positive headlines.
So let's break it down. What are the biggest risks facing PNB?
Well, I think the most obvious one is asset quality.
Yeah, we've talked about this a bit already.
Right. Can PNB keep those low NPA levels as they expand lending to riskier borrowers?
Because the emerging markets, those
Yeah.
affordable housing segments, those are inherently riskier
Right. Those borrowers might not have the same financial track record.
as those prime customers.
Exactly. So what happens if the economy takes a downturn?
Or if interest rates spike.
Could we see a wave of defaults?
That's a scary thought.
It is, and it's a real possibility.
So what's PNB doing to mitigate that risk?
Well, they're relying a lot on data analytics and early intervention strategies.
Right, trying to predict problems before they happen.
Exactly. But even the best algorithms can't predict the future with 100% accuracy.
So there's always a chance they could be wrong.
There is.
And if they are wrong, if a lot of those loans go bad, what happens then?
Well, that's where their capital adequacy comes into play.
That safety net we talked about.
Exactly. That's what's supposed to protect them from a major financial hit.
So they've got some backup, but what about the competition?
Oh, the competition, that's another big challenge.
Because PNB's not the only one playing in this space.
Not at all. The housing finance market is getting more and more crowded.
Who are they up against?
Well, there are the traditional banks, of course. And then there are other specialized housing finance companies.
Like PNB.
Right. And then, of course, there are the fintech startups.
Those disruptors.
Exactly. They're always coming up with new ways to do things.
So how can PNB compete with all of those players?
Well, they need to keep innovating.
Like coming up with new products and services.
Right. And they need to make sure they're offering the best possible customer experience.
Because in the end, it's all about the customer.
Absolutely.
But innovation costs money.
It does.
And so does technology,
Which brings us back to funding.
right? Did the investors raise any concerns about PNB's funding?
They did. There are questions about their funding sources and the cost of capital.
Because if they can't access capital at a reasonable cost,
Then they can't keep lending.
and if they can't keep lending, they can't grow.
Exactly. It's a vicious cycle.
So it sounds like PNB needs to be very careful with its money.
They do.
And there's one more thing we haven't talked about yet.
What's that?
Regulatory changes.
Ah, yes. Those are always a wild card.
Because governments and regulatory bodies, They love to tinker with the rules.
They do, and those changes can have a big impact on businesses.
So PNB could get hit with new regulations.
That make it harder for them to operate.
Or more expensive to comply with.
Exactly, and that adds another layer of uncertainty to the whole situation.
It's like they're walking a tightrope. But it's not just about internal factors, right?
No, there are also external factors to consider.
Things that PNB can't control,
Like what?
like the global economy.
Right, inflation, currency fluctuations, global slowdowns, all of those things can have an impact.
So even if PNB does everything right,
They could still get sideswiped by something outside of their control.
it's a tough world out there.
It is.
But despite all of these challenges, PNB seems to be in a good position.
I think so. They have a strong financial foundation, they have a clear strategy, and they seem willing to adapt to changing circumstances.
So they have the potential to succeed,
They do.
but it's not going to be easy.
No, it's going to take hard work and smart decisions.
And maybe even a little bit of luck.
Always helps.
But you know what I think is really interesting about PNB's story?
What's that?
It's just one example of a much bigger trend that's happening in the housing finance sector.
What trend is that?
This move towards inclusivity, reaching out to underserved communities, making homeownership more accessible.
Oh, yeah, that's a big one.
And it's not just about making money, it's about making a difference in people's lives.
Absolutely.
So as we wrap up today's deep dive, let's leave you with one final thought to ponder.
Okay, I like it.
What are the long-term implications of this strategic shift?
That's a good question.
Will it create a more equitable housing market?
Or could it lead to unforeseen consequences?
We'd love to hear your thoughts on that.
Definitely join the conversation.
And be sure to join us next time for another deep dive into a fascinating topic.
Until then, stay curious.
This is The Deep Dive signing off.